If you're a business owner and still overpaying on taxes, it's probably because no one has ever shown you 5 tax-saving cheat codes that I will be sharing in this video. The wealthiest entrepreneurs aren't smarter than you. They just have advisors who understand the tax code inside and out and implement tax-saving strategies like the ones I'll be sharing with you in this video. I'm Trevor Densmore, founder of TJD Accounting Tax, and we help growing businesses legally cut their tax bills, increase their profit margins, and get back to actually enjoying running their businesses. The reality, most tax mistakes aren't made in April. They're made every single week of the year. But here's the good news. Reducing your taxes is now easier than ever if you know where to look. In this video, I'll walk you through the 5 simple moves you can make to get your taxes under control, legally, proactively, and without needing to become a tax expert yourself. And it all starts with one switch that could save you thousands by the end of this week. Let's break it down. Cheat code 1 is entity structure optimization. This is when you're choosing or optimizing your legal business structure for tax efficiency, not just legal protection. Generally, there are 5 business legal structures to choose from. First, you have sole proprietorship, then you have LLC, partnerships, S corporations, and C corporations. Each one of these business structures offers different rules and guidelines on how they're taxed and the deductions that they're allowed to take. So picking the wrong business structure can cost you thousands in self-employment tax and missed deductions. But the right structure can unlock major tax savings by optimizing how you pay yourself and claim deductions. For example, if you are a growing sole proprietorship or a single member LLC and you made about $200,000 in profit for the year, you're more than likely going to pay self-employment tax on the entire amount of that profit, which can equal to about over $28,000 in additional taxes. For those of you who do not know, self-employment tax is an additional tax of 15.5% that is taxed onto your self-employment income or income from your pass-through entity, which will be entities such as sole proprietors, LLCs, and partnerships. But if you elect to be treated as a S corporation, you can now avoid self-employment tax by paying yourself a reasonable wage, let's say about $80,000, and then the rest of your profit will be treated as a distribution. The only part of your profit that will be taxed is the $80,000 that you paid yourself as a salary. And the remaining part of your profit will be treated as a distribution, and which is not subject to self-employment tax. This simple switch can save you $10,000 or more and put money back into your pocket, allowing you to reinvest it into the business and help grow your business even further. Now that you have the right foundation, let's talk about how you actually pay yourself. Cheat code 2, strategic owner compensation. This is primarily for pass-through entity owners, specifically S corporations or LLCs taxed as S corporations. As the owner of a S corporation, you are required to pay yourself a reasonable wage by the IRS. These wages are subject to payroll taxes, while the remaining profits from your business is treated as a distribution and is untaxed. When planning your salary versus your distribution, you want to be strategic. You don't want to just throw out some random amount. Your salary must be reasonable and should be structured in a way that minimizes payroll taxes, but also maximizes QBI deduction, also known as qualified business income deduction. Picking the wrong compensation strategy could mean that you overpay in payroll taxes, or you're subject to IRS scrutiny because you didn't pay yourself a reasonable wage. In addition, you may not be maximizing your QBI deduction. Optimizing this frees up significant cash flow for you and your business. Some key factors that you want to consider when setting your compensation strategy is that you're going to want to research industry benchmarks, meaning that you're going to want to take a look at what other people are being paid for similar positions positions at other companies in similar industries. Another factor you want to consider is your circumstances. You're going to want to adjust your benchmark based on your duties, your training, your education. The next factor is you want to consider your company's financial situation. You are going to want to take in the company's financial performance and profits into account. Lastly, you're going to want to consult a tax professional to make sure that you're paying yourself a reasonable salary and you're maintaining compliance for your S corporation. Building on our S corp example, if your business profit is $200,000, paying yourself a salary of $80,000 means you pay payroll taxes on $80,000. The remaining $120,000 can be taken as a distribution, which isn't subject to self-employment or FICA taxes. Plus, you can take the 20% qualified business income deduction on that distribution income, saving you even more money on your personal income tax bill. Beyond how you pay yourself, are you capturing every single deduction? Our next cheat code is all about proactive planning. Cheat code 3, proactive deduction maximization. It's moving beyond reactive expense tracking to proactive planning to identify and capture every legal deduction, including those that are commonly overlooked or require specific documentation. This isn't about receipts. This is about structuring activities to be deductible. You see, every missed deduction is lost profit. Proactive planning ensures that you're leveraging all available tax breaks, reducing taxable income, and increasing net revenue. For example, retirement plan contribution. Did you know setting up a SEP IRA or solo 401k allows you to contribute tens of thousands of dollars pre-tax, dramatically decreasing your taxable income while building your personal wealth? So if you were to contribute, say, $60,000 to a SEP IRA, you could potentially save $15,000 to $20,000 in taxes. Then there's home office deduction. If you use a dedicated space at home exclusively for business, you could be missing out on deducting a portion of your rent/mortgage interest, your utilities, or even your home insurance. This often overlooked deduction can add up quickly. For example, if you have a 300 square foot office space, you can potentially take a $1,500 deduction plus proportional utilities. Speaking of deductions, the next cheat code turns your business investments into immediate tax savings. Cheat code 4, strategic asset acquisition and depreciation. This is using the purchase of business assets to your tax advantage. These assets include equipment, software, or certain property improvements, leveraging deductions like 100% bonus depreciation. Smart asset purchases don't just help your operations. They can generate massive first-year deductions, significantly reducing your tax liability and improving cash flow for reinvestment. For example, if you need new office furniture, computers, or machinery, with the new tax bill, 100% bonus depreciation is now permanent. That $75,000 new piece of equipment, that's a $75,000 deduction that you can take this year. Cheat code 5, year-end tax planning and projections. Implementing a proactive system for ongoing financial review and tax projections throughout the year, rather than waiting till tax season. This allows for timely adjustments and decision making. Most tax mistakes are made because businesses do not know their financial picture until it's too late. Proactive planning helps avoid surprises and make strategic moves before the year ends, ensuring consistent positive net revenue. So instead of being surprised by your tax bill in April, imagine knowing your estimated tax liability by October. This allows you to identify if you need to buy that new piece of equipment, make a retirement contribution, or adjust payroll before year end to maximize saving. No more guessing, no more scrambling, no more painful April surprises. So there you have it, the 5 tax saving cheat codes that can completely change your business financial future. Now you've seen the 5 cheat codes that the wealthiest entrepreneurs are using to slash their tax bills. The difference between the business owner that pays $80,000 in taxes and the one that pays $30,000 in taxes isn't luck, it's strategy. At TJD TJD Accounting and Tax, we don't just file your taxes. We help you build a proactive system that prevents you from overpaying in the first place. From entity structure to strategic payroll to deductions your last CPA probably missed, we cover it all. So if you're tired of feeling like the IRS is your biggest business partner, let's change that. Click the first link in my description to book a free call with me and my team. We'll review your setup, uncover missed opportunities, and show you exactly how to start saving thousands legally starting now. You don't need to become a tax expert. You just need the right partner.